Hi, I'm Marty Nemko on money. These are my current thoughts on money. On spending, we overpay for luxury: cars, jewelry, vacations, clothes, education. Designer labeled diplomas are usually not worth the money unless maybe Harvard or Stanford. Luxury brands are heavily advertised because their profit margins are higher. Default to mainstream brands, widely sold and highly regarded brands, not only because they're much cheaper, but because they sell many more units and thus prices are lower because economies of scale. My favorite brands: Toyota, Sony, Whirlpool, and house brands at major retailers such as Home Depot and Trader Joe's. Exception: blue-collar services. There, I look for highly rated one-person businesses. In contrast, if you hire a company, you usually pay a lot for management layers and marketing. If you don't overspend, you have more to invest, which makes you money, maybe a lot, without lifting a finger. Keep listening. Regarding saving, Einstein called compound interest the eighth wonder of the world. Compound interest refers to getting interest on your interest, or dividends on your dividends. The effect can be enormous. For example, if you invest, say, just $100 a month in the widely recommended Vanguard Index 500 fund, which gives you bits of the 500 biggest profitable companies, symbol VOO, it's worth about $23,500 today. If you did it 20 years ago, it's worth about $80,000. 30 years ago, $300,000. If you would rather sacrifice some likely profit in exchange for likely smaller ups and downs, consider a Vanguard all-in-one fund. Still at low cost, you can choose one with 40%, 60%, or 80% stock, but the rest in bonds, which tend to be less volatile. Of course, it's old news that after leaving a few months' rainy day fund in a money market or bank savings account, you should then invest in something that's tax protected: a 401k, 403b, IRA, and or 457. Those tax defer your earnings, unleashing the aforementioned magic of compounding. Do not try to time the market. Usually emotions get you to buy when prices are higher and sell when lower. The opposite, of course, is what you want. Whenever you have a predetermined chunk of money, invest it that day. That gets your money working for you right away and gets you more shares when prices are lower, fewer when higher. What about less liquid investments? I have stayed with blue chip stocks like Google, Amazon, and Procter & Gamble, where I get to invest in some of the world's, as they say, best and brightest people. Even more, I appreciate the diversity of investment and low cost in ETFs, exchange-traded funds, like the aforementioned VOO, VUG, which is Vanguard Growth Index Fund, which is like VOO but weighted toward the better performers in the S&P 500. After all, objects in motion do tend to stay in motion in the same direction, and that applies to stocks. And because I'm bearish on the U.S. versus Asia, Vanguard Emerging Growth Fund, symbol VWO, contains a market basket of leading Asian companies. Real estate has done well, but it brings with it big transaction costs. And it's a hassle to buy and sell, and it seems unclear whether prices will continue to go up when the average home in a coastal city suburb costs much more than even two physicians can afford. Other low liquidity investments like art, private equity, and jewelry have higher fees and increased fraud risk. Advisors, I avoid them. For most people, investing simply, as I've outlined, maybe with a Google search to answer your unanswered questions about your situation. But this is a good time for me to mention I am not a licensed financial advisor. These are personal opinions, and I am not paid by anyone to endorse any investments. But when in doubt, as they say, consult a trusted licensed professional. Speaking of which, I've never had a bad experience with Vanguard, and they do charge super low fees. And if you do need an advisor, you can be sure that one of theirs will not run away with your money. I cannot say the same about others. May you get richer, and slowly. Get rich quick is too often a formula for getting poorer quick. In any event, that's on money. As usual, I welcome your thumbs up and accept your thumbs down. I always look forward to your comments, and especially like it if you hit the share button below. Share on your social media so that my efforts can have broader impact. And I am flattered if you choose to subscribe to my channel. I certainly would welcome you taking a look at any of my 36 books. Perhaps most relevant is How to Do Life, but all 36 are on Amazon. In any event, I thank you for watching. I am Marty Nemko.